Morning, everyone. It's Chris from Solstice as well as Excel. You can find us on X, Instagram, as well as Discord and YouTube. This weekly video, the YouTube channel, it's offered for free. For Market Outlook, I'll be doing for June 1st till end of the week, which is 5 days. An overall view of the overall market. Smash the like. Let us know what you think. Give us your commentary. We're here to help. We're not a broker dealer. Past performance doesn't give anybody indication of future results. This is just for educational use, and I hope this is helpful. If you need to copy the material, make sure you check the website policy before you do and get in contact with us. Let's go to the first slide that I have up here. I'll put the Fortune 500 company, which is the E-mini contract, which is the ES, I put as well as the Nasdaq NQ_F, as well as the Dow Jones Industrial Average, which is the YM_, the monthly levels. And what I did, I went as far as 2018 to show you how the market acts on action and reaction with linear regression channel uptrend, and we held the 50 simple moving average. This time we did not test it from, this is the February 19 highs, this is the March 23rd, and we rallied up. The 2022 was the highs, then 2023 we looked above and we failed to October lows of 2020. In 2023, we rallied and we recovered 100% of the combination of those three instruments. We closed slightly above on the Dow, S&P, and the Nasdaq combo of the three. In 2024, we looked in that area. We held the 2022, 2023 highs, and we reversed completely to the highs, and we created a new high. Eventually, when we fell down, we fell back down from the March 23rd low. In October, we tested the linear regression uptrend channel, and we bounced up and we cleared the 18 simple moving average. But this month in basically May, we had a candle up, but we got a little bit of an exhaustion up at top. We got to pay attention to the daily charts on that exhaustion to see where we are in relationship to that linear regression up and bottom. If I draw a midpoint, this midpoint of it, which is the 50%, has to hold in order to continue higher or lower. Let's go to the next slide. Once again, check us out, give us your commentary, smash the like button, let us know what you think. Let's go to the chart on the S&P 500, which I showed you here, the combination of those three instruments. What I want to do is put the SPX, I did it 2 weeks ago in the YouTube video, weekly video, but what I wanted to show you here, that this low to this high here, if I drew this area, it gives us, what I want to do is do this just to show you the kind of levels we are getting. We got to 150% and we bounced back down to basically the 100%, which was in June highs and December highs of the 2023. So I wanted to put this up here just to show you how it is, because all Fibonacci's are usually removed during quadrant level one. Oh, we duplicated it. Okay, so you can see that this level, when we went up from the January to the high, these are almost identical retracements. And even if I take this low to this high, to this low, I mean the high from 2023 to the low, or this one from here to this low, it gives you the extensions to the top. So I wanted to show you that there is exhaustion up here, but let's go to the daily chart. And what I want to do here on the daily to show you the overall levels on the S&P 500. When we came back, retraced to that 56.69, you can see the consolidated 56.50, the 56.74, and the 56.9. When we fell down on that level, we fell through, we had these two gaps. I marked these two gaps up here, which we have not retraced to, and we marked that level. That's an important area, the 56.66 from the Trump tariff issue between China, Europe, and, all the global markets. That China news brought it down to the April lows. We looked underneath that level and rallied back up on a shorter time frame. But this week, if you can see, if I zoom in this area, you can see that there is consolidation going down. We had this is the Friday, because we had a short week, remember? Friday, Thursday, Wednesday, Tuesday, and we had that Monday low and we gapped up. You can see that there is a tiny little gap in here. If I mark it in the chart, what I want to do is give you guys a marking on it so everyone can see it. And what I want to do is extend it to the right side to keep an eye on it for the coming week in case we retrace into it, as well as this one down here, which I did not mark, but I'll keep it as an eye. If we continue higher, I'm looking for the breakout of this candle here. If we fall back in, I'm looking for the gap fill on this area where there was consolidation at the 57.20, and the 58.30 has been holding well in the last couple of days. Every time we tested the area, we bounced off. Let's see what the market outcome will be in the coming week. Let's go take a look at the combination of the mega. Let's do the mega 7, including Netflix, which is 8. And the reason why I wanted to put this up here, this was the prior month measured move from high to low in basically April. You can see we retraced to about 161% of that move to the upside, but we are consolidating on Apple, Amazon, Google, Meta, Microsoft, Netflix, Tesla, as well as NVDA. But the most important thing, I see there's a little bit of exhaustion in that linear regression uptrend channel. You can see we have an uptrend channel. It's like a cone, but getting tight. And what I did, I put this last week in the week before video. I put that center of gravity between, a cone or linear regression uptrend channel. If we're going to go above it, I'm looking for the upside of that channel. If we fall back in, I'm looking for the backside of this channel, the 18 SMA on the daily, and eventually the 116, where there was quite a bit of consolidation here. Because you can see when we moved down, we went back up, came back in, moved back up. That was the consolidation, and we had that push up. We got that little tiny gap in here, which was never filled, and we rallied up and continued. Then we grinded here for a week and pushed up on the following week, but we had an inside 10-12 day range in this area. If we fall back in, I'm looking for that side. If we rally up, I'll look for the breakout on the combination of those instruments. Let's take a look at now the Bitcoin, and I wanted to show Bitcoin here. I think there is a little bit of exhaustion. I was going to do a weekly video last week, but it was a short week. I only posted some stuff on X as well as LinkedIn, just to show the overall levels in Bitcoin. And the reason why I wanted to show this looks like for me a head and shoulder inverted, and I think looking above that 108 area and folding through it is very important. If I don't hold the 18 SMA, I'm looking for the backside of the 116 simple moving average, which will catch up between the 96, between F3, which is the 38.2 fib, and F5, which is the 50. But I think the 50 SMA coming up to this area, the 96 through 97, 94 area, as well as the 116 doing the catch up. This means, a good area for reconsidering, because there was a lot of consolidation between here and here. Even if I just mark it and take it off, let's just do this just to show you this area, how big it is on the chart. So coming back to this area, that's an important area for me to look to accumulate more shares of Bitcoin or ETFs, GBTC, IBIT, and so on, Mara, and so on and so on. I think as far as I'm concerned, if that 18 SMA does not hold, I'm looking for the backside of the 100 to 96 area before I do grab more crypto or Bitcoin or Ethereum and so on. So this is very important to take a look at it. I'm not saying it can happen, but if it does, this is a good area to look at. So let's go to the last one up here. I want to do the measured move on the S&P 500 micro. I'm going to use the micro ES. In the micro ES, this was the tariff news. I kept everything up here. When we hit the 51.45, I told everybody, hey, get in this area, go long. But unfortunately, we got wiggled out a little bit on the levels. We had to do a little bit of chasing. Then we had this consolidation. We eventually broke above this area. We had that nice rally, but inside this range is basically consolidation until we resolve out of here. We are holding the 200 SMA, the 116 on the daily, the 200 and the 250. And the 50 is way down there. When they cross, it's a bullish cross. When the 18 and 50 crosses from the top, that's a bearish cross. So we did that head, This is the shoulder. I considered this was the little shoulder, but here now we are consolidating above the 58.37, 58.32. As long as I am holding that area and that and continuation, that would be great. If it falls back through it, I'm looking back for the 50 and the consolidation of the 57.23, 56.96 in this area in order to continue higher. So I'm not biased, but I'm going to show you how to do the measured move on this chart. Before I do that, I want to show you the micro and Q. And we'll do just either one, it doesn't matter. You can see that there is consolidation. I had that uptrend channel, it broke through, it came back in, we consolidated, we can remove it. Even if I connect this from here to here, we are in an uptrend. I want to do this just to show everybody. We'll do the measured move on the S&P 500. You can see it here. When it broke, it basically broke through it. So what I want to do is grab this area with this here, connect these two, or connect the one at the bottom. Even if I activate it and you grab this area to here, this is an uptrend channel. And even if I duplicate it or grab this one from here to here, you are in an uptrend on the Nasdaq as long as we hold the 18. If not, we look for the backside of this area. So this is why I wanted to show the micro NQ. Let's go back to the micro ES and do the measured move. It can work on any instrument, whether you trade equities, options, commodities, futures, and so on. So let's go now from the daily chart to an intraday chart. And what I want to do here is take a look at the 10 or 15 day range. It doesn't matter. And we're going to put it on a 4 or 6 hour chart. We can use the 6 or 12. It doesn't matter. The overnight action is in the European zone. You know where if I take the overnight action off, it'll show you the gaps. You can see where the gaps are between here and vice versa in here. So last week's range, I'm not going to go all the way to the left and draw a fib. You can see the machine did the highs and lows for the 2-week range because it was in consolidation. We had 3 weeks was this gap up here. So what I want to do, count the last 4 days, because remember, Sunday was a holiday. We had the Memorial Weekend. So what I want to do is grab this high to this low and do the measured move. So what I do is here, I take the highs from the 66,008 to the low on Sunday, which was right here. And even if I look at the upside or downside, these are my extension where there's going to be support and resistance going up. It does not, the market doesn't have to do anything. We're going to trade what we see with no bias. And this is the reason why I use these levels to give us support and resistance in relationship to an RSI, stochastic, CCI, MACD, but ours is a little bit tweaked differently, tweaked a little bit differently in relationship to the 70-30 in an RSI midpoint 50 or MACD 12 26 9. We don't use those numbers. We use them a little differently. We change those. If you want to learn a little bit more on how to use the technical when we come in compression at an expansion, we had about 3 weeks range until we resolve either to the upside here or we resolve to the downside. We are open to either side with no bias. So let's go take a look at it in a little different form by looking at the style setting. We can look at the monkey bars right here on the E-mini, which is the S&P 500. You can see that 30-minute range. What I want to do, we have here actually not that many days here on this bar. You can see it. Time frame is only 3 days. What I want to do is go 15 days back, 30 minutes. And what I wanted to show you where the virgin control points are in relationship to the time spent as well as the prior month. So this is a VPOC right here. What I usually do for a point of control where most volume is, I mark it with some marker. I'm not going to be accurate on it. I'm just going to make them like this. That way you can go in. Actually, I'll just do this one to show you when you zoom in. You want to know where that virgin control point activated. Make sure you have it in the center of that level so you know where that 58, 10, 50 is or 75. That's where your marker is. That should be 50. Edit the property. You can basically make it so accurate that you know where that virgin control point where most volume has been for the prior week. This one was retested. This was retested. This is retested. This was retested. This one was retested. So for Monday, this is the Friday's VPOC. You mark it and you can do the same thing. And if I want to go back to the left side, I can see where the lows are. Like this virgin control point was never retested. I mark it that way. When I look at the charts, let's zoom back down, grab this to the right. So when I want to look at the virgin control points at the low or the high, I have these levels, and I do have some above the 66,008, that are virgin control point, but I did not go show them. Usually coming to that point of control and bouncing off of it has a meaning value to fill, but we look at the gaps in relationship to value high, value low, point of control, and in relationship to the time spent was the time spent low and the high. That time spent, usually if you take the high and low and the time spent is higher, the sentiment is higher. Even on Friday when we fell down, you can see we fell lower, but the sentiment was higher. We got dragged back up on Friday. Instead of selling off, we got, everybody brought Friday's market. But remember, May 31st, is it May and go away to the Hamptons and have summer and come back, end of July, for the for the winter rally in August. So this is something that you have to consider: when to accumulate, when to get rid of some inventory, when to hold on to the inventory and buy positions that are in good value. So this is how you use the volume profile. If you want to learn a little bit more about it, let us know. So let's go back here and put back from monkey boys to standard. So last but not least, I wanted to show one more instrument before we go in the Excel. I'll do them very. It's the tech sector. We're going to go to the daily chart annual. So just go 1 year daily. You can see that there is consolidation with this gap, and you got another island here, another island here, reversal. That is in consolidation. Let's take a look at the BV BSV, sorry, BSV. This is the bond sector using Vanguard short-term bonds. You can see that the bonds are starting to rally. Is the Federal Reserve Board gonna decrease interest rates by end of June or July? Keep an eye on it. So let's take a look at the as well. Not the Dow Jones Industrial. I want to look at the value in the EF and the growth in small cap IWF is the 1000 Russell growth. And what I wanted to show in the growth, you can see that there is consolidation in the breakout, and the IWD, you can see the dividend is a little bit lagger. But if I put the Russell IWM, you can see that it is way lower because it consists of all these major companies in the US, small cap, that are from $1 all the way to $100 range, but they are in the small cap companies. And you can see that the small cap has been a lagger in the industry, creating an inverted head and shoulder or a cup. I am paying attention to the low here in the 50 SMA, as well as the breakout of the 210 on small cap. Let's just, last but not least, go back to the Nasdaq, and I'll do the measured move for everyone here. You can see this was the last month measured, a monthly Fibonacci. I'm going to remove it. We're going to look at the weekly chart, intraday, time spent, intraday, go 15 days or 10 days. It doesn't matter. We'll do 15. We'll go this time for 6 hours, push OK. And we can see where the highs was and the low was here for the week, except not using Friday. Remember, we're not going to use Friday. We use only weekly from Monday to Friday. The level, this was the prior week. This is the low. Even if I extend it to the right, edit the property, extend it to the left instead of the right. Let's just go backwards so everyone can see where those levels are. You can see where that 80%, between the 50 and the 60, there's a 61 and 78, and the 80 usually coming back to this area and filling the gap. There's an opportunity here for a buy zone. You can see the 100% where it's got the support this week. The Nasdaq, in order to continue, you need to break that 50, come back to the 80, and continue high to the backside of this channel. You are in an open cone, but if I drew one up this way on the channel, we are in a uptrend unless I do break this small level in this area. You can see that we are in an uptrend and an open cone, because the distance from here to here is the same distance from here to here. Even if I create a box and I mark it, let's just do it this way. I'm going to mark it for everyone so that way everyone can see it. You can see it. Okay, everyone, duplicate this distance. Usually mathematically all levels are identical for levels to the low and the upside. You can see that I did the same thing, and even if I activate it, just push it a little bit to the right so we can get the right level. This is your level for the buy zone. So the measured move or Fibonacci's or retracement, or you duplicate this to the upside and you'll get the same move to the upside. If I duplicate the distance, I'm not biased. We trade what we see, and you can do the same thing to the upside. So trade what you see, not what you think. The most important thing is understanding the levels in relationship to a momentum indicator, if it's trending down or trending up with no bias. So I hope this video was very helpful. If you have questions, once again, get in contact with us. We're here to help. Reach out to us. Take care. Over now, and enjoy your weekend.